The euro is doing more than just holding its head above water. Despite a deluge of apparently bad news, it's closer to 130 than 120 and poised to head higher. I'm Jamie McGeever and this is today's Market Pulse. Well, I'm joined by Reuters FX analyst and long-term Eurosceptic Neil Kimberley. Neil, the euro's resilient as ever. We've got the Portuguese bond swap, that's good news. Spain about to apply for aid, we think. Good news. What's going on here? Why is it so strong?
Market wants to believe, Jamie. I mean, personally, I remain sceptic. I mean, even as we're coming on air, the Cypriot government saying they've had a bit of a falling out with the Troika, which I think is why we're back down at 129, the figure. But the market wants to believe. You know, Mr. Rajoy, will he, won't he? Is he going to try and wait for the Galicia election on October the 21st? But the bottom line is, he's got somewhere to go if he wants to. So we're up here at 129, the figure. Euro looks pretty well bid. The market is aware of strong bids from central banks around the 128.80 level, and below that, that 200-day moving average at 128.30 has been remarkably resilient. Now, at 129 a figure, we know that there are offers above 129.30, so we're playing that 80-30 range as New Yorkers are coming in. But going into the event risk at the end of the week, the market broadly wants to play this from the long euro side. Two reasons. ECB should be no surprises. And if they are...
No further easing. We expect no further easing.
No, the market, I don't think, expects any further easing. Let's see how things play out. The bottom line is, every time the ECB steps up with something, the policymakers go, ooh, that's nice. Let's step back and wait and see what happens. The ECB will want to see the politicians do something now. Then we got non-farm payrolls on Friday. Now, last Friday, a lot of hedge funds were buying topsides in euro-dollar and topsides in dollar-yen in expectation of a weak number, which would perpetuate QE infinity, as it's been termed by the Fed. Now, if we go into this number, if it's a bad number, that argument remains. If it's a good number, we fall back on what Mr. Evans of the Chicago Fed said a couple of days ago. Well, you know what? We need that unemployment rate down by 7%. We can take a few risks with inflation. It's still going to be risk on, still positive for the euro.
So whatever comes out from payrolls on Friday is a win-win for the euro. We think that range, you mentioned a narrow range, but we've been in sort of 128, 131 for a while. If we do break higher, you have to suspect, though, that the further north we go above 130, the buyers will start to dry up.
You know, the greater the cynicism, the higher we get. And let's be honest, Eurozone needs a higher euro like it needs a hole in the head. You can't sell your olive oil at 132, 133, 134 when you are struggling to ship it out at 121. It's just not a great idea. And if you're sitting there long of it, and you're up around the 131s, you know it's been toppish, you're going to start to take your profits. Because frankly, the higher it gets, the more important to you are the uncertainties about the Eurozone. And all we've got at the moment is politicians sitting on the fence waiting for something to happen.
On the other hand, though, just to finish up on the euro, on the other hand, as you mentioned, we've got QE infinity from the Fed. So there's always going to be a floor, and that floor for the euro is probably going to be higher.
It's edging up, yes. I mean, you've got 128, 128.30, now 128.80, we're 129. Is it going to edge up? Yes, but is it still going to be in a range? I think so. I don't find anybody out there who's looking for the next 5, 6, 7, 8 big figures. It's all 2 big figures if I'm lucky. In fact, half the cases, 50 points, lock it in, baby.
OK, moving on to the Aussie. The bearish news keeps piling up for the Aussie. We had the RBA rate cut, the widening trade deficit, and the data from China continues to look on the soft side. Are we looking at a break below parity? And if so, when?
Well, last time I was on here, you asked me about the Aussie. I said then, I don't trust an Aussie rate with a 1 in front of it. I'm of like mind. We've seen the data from Australia. It's not good. We've seen what the RBA have done. They may cut again. Now, of course, the Australian yield is still attractive. Of course, there are central banks still stocking up with Aussie as it's coming down. But the bottom line is, we don't know what's happening in China. We think it's not very nice. We think it might be the tip of the iceberg. And if it's bad for China, it's bad for Australia. I think we're going to go down to parity. It's not going to be straightforward. For example, at the moment, we're hovering just above 102. I know for a fact there's a bucket load of bids in the 107, the figure, 102, the figure level, and that is going to stop it going down initially. Do we get a spike back to 102.50? Yes, I think we may do. The market's very short intraday. But then you start to sell. The one thing I'm picking up from some big punters out there, and there still is a structurally long Aussie position, is that the Aussie dollar is no longer a natural let's buy the dip. It's now, ooh, let's sell the rally. And it's only one step from let's sell the rally. Say, you know what? Just hit it.
So parity in the next few days, perhaps a week or so. Who knows? Neil, let's finish up with the yen. Japan has a new finance minister, Mr. Jojima. Plenty of warnings from him, repeated warnings on The yen, the strength of the yen, but no actual intervention yet. Will the market test his resolve?
I think Mr. Jojima, fresh to the job, no experience in the finance ministry, so we have to assume that everything he's coming out with is being given to him from the bureaucrats behind. He is being educated just as we are being educated about him. But the more you say without doing anything, the more likely it is the market takes you on. Now at the moment, we're around 78.20. There are Japanese exporter offers in size above 78.30, so it ain't going up too much today. Between 78.5 and 79, there's another bucket load of exporter offers. And all the way up, it's the same case. Now, if they decide that they want to help these guys out and push it up, then they should come in and just do it. Because they are on their own. There's going to be a G7 next week in Tokyo. There's bound to be an awful lot of camaraderie and blah, blah, blah. But the bottom line is, they ain't going to get no help from anybody else. And if he wants to push the button, push the button. And as for talking about the Bank of Japan buying foreign bonds, well, let's face it, that's a legislative process. It takes a while. Mr. Shirakawa doesn't like the idea. If you want the yen weaker, let's not talk about it. Fire the gun.
OK, Neil, thank you very much. My thanks there to Reuters FX analyst and Eurosceptic, of course, Neil Kimberley. That's all from us for now, but do join us each weekday for Market Pulse, a snapshot of what's moving on markets and why. I'm Jamie McGeever. This is Reuters.